What's going on, traders? Hope everybody's having a great week. Thank you for joining me on this video. Got a lot to cover today. We're going to do our midweek recap of the S&P 500, the SPDR ETF, and do some analysis and some looks at different things in the market here, as we always do. Of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. We'll also be seeing where we may want to engage the market, manage our risk, and what to potentially expect into the back half of the week as we round out Wednesday and look into trading here on Thursday and Friday. Quick reminder though, we did go over the economic calendar at the start of the week. Remember, Powell and a few other speakers are on the docket for tomorrow. So just keep an eye on that as well during tomorrow's session. All right, so we're going to just start off with some candlestick analysis here and some trend sequence, what's going on from that perspective. The biggest takeaway that we got, now we've talked about this kind of being a potential bull flag, right? Or potential distribution. And we were talking about this range that we were trading in for the last few sessions. And, you know, that we would need to start to see a break out of this range before we really had a clear vantage point of what this was, a flag or distribution, right? And as you can see today, on today's candle, we printed it was a down day, of course, in the markets. Markets trended down for most of the day. We were down about 1.33%, down about, what is this, about $5.81. So bears definitely came out of the woods here with a little bit of strength, and we are apparently breaking out of this range now. So we talk about volatility or price action compression, and now we might start to see, after today's move, an expansion in the price volatility once more. So if this is a true break of structure, now the one thing I will say about what we're looking at from this perspective, we closed at the lower part of the range. So our closing price was, whoops. Oh, that's going to mess up my whole thing. Let's see if I can line it back up. There we go. Close enough. Our closing price was in this lower part of the range, right? Oh shoot, I didn't mean to do that. Sorry. And although we do want to watch out here. See, on the candle from the 13th, we did buy back up inside of it, but this one, we closed outside of the range and in the lower part of this candle here. So we're going to probably need at least one more day, see how we end up on Friday or tomorrow. One more session to really confirm if we are outside truly of this potential distribution zone. But as it stands, if we do get another close outside here, we will consider that a distribution break, and we'll be looking for a mark down. Now what we could even see, and I'm going to zoom in on the chart a little bit more from a closer viewpoint, but we could still see from here a push back up, back test, maybe even we come back above. It really will just depend whether we close back inside. But for a potential short trade, coming back up, retesting this prior balance, and then looking for the move to the downside like so. So something to keep an eye on if we do start to come back up into that, basically that 432 area, 431.70, anywhere in that zone could be a potential spot that a swing trade may present itself if in fact you are bearish currently. Now it's been really no secret, where my downside targets have been, and that even though we were sitting in this kind of neutral to bullish neutral stance right now, and again, of course, as you guys know, I'll go either way the market goes. I try to keep the bias out of it. I have an idea, a thesis, but if this turned out to be a flag, I'd have no problem flipping, more towards maybe a swing call, and playing a little bit of upside. And, I did catch a little bit of upside on this rally, right? Now I'm currently swinging short. But there may be more opportunities. We'll see. I've already started taking some of those profits, to be honest, on today's move down. But like I said, there may be another chance here on a back test of this range. But we got to see. Give it 1 or 2 more days, in my opinion. Let's see how the week closes. But as long as we do not close back inside this bounce, we can look for that downside. Now, I have been talking, where's the first spot that I think that we may be heading? We were talking from the market auction. If anyone looks at TPO charts or anything like that, it's one of more futures thing. But from the market auction, we have very weak structure here in the 420. So I think there's unfinished business in this general area that's going to need to be worked out. So if I was to, guess, I think that we'd be heading into that area. Market is going to want to try to repair that unfinished business in this 420 zone. But we always take it one level at a time. We may only come down into the prior structure break, the high right here, and we've already been over this potential kind of mini Wyckoff sequence taking place. We could just trade into 425 again, only come back to retest the top of this previous accumulation zone. I don't know how far. Maybe we come all the way to the bottom. Maybe we only come into the whoops, let's see if I can get, oh dang it. Hold on. Okay, that's close enough. Maybe we only come into the half gap of this prior accumulation balance zone here. So that part, of course, I am not sure about. But the first ultimate target on that potential retest of this balance play would be probably in that 425 area, so another $5 or so to the downside. And then that would be the main kind of area where I would probably be looking to take some off or to exit the position completely, because we don't know. It's a big zone there, a lot of accumulation. But that could be, if we break lower, then we'll look obviously for halfway, our half gap somewhere around that 423, and then we'll look at that unfinished business in the 420s. Under that, if we start to really get under that and under 418, I've already been over where I think that potentially if this bear move plays out in full, anywhere from that 415 to 410, leading us into the daily POC, which lines up with the accumulation zone from, we've already been over it, from springtime right here, right? So that's where I would think that we would be going. Now, how far down do we get to the bottom of it? Do we come to the middle? That's anyone's guess. Looks like if I was to draw it out just like this, our half gap is pretty much POC, right? I could just kind of go over like that, right? So, but we could even just bounce right at the top of it. Very possible as well. So, but we take it one step at a time. That's only going to be, of course, if we break under the 420 and 418. That's what's all that's gonna depend on whether we get into that 410, 415 area. So, but as it stands, so far we were looking at this being a potential daily lower high in the trend sequence, right? We've got our, whoops, I hate how that's, my OCD doesn't like that crooked, but whatever, doesn't really matter. We've got our lows, our swing low here. Now we've got our next daily lower high. So in the trend sequence, the next thought would be to create a new lower low. Bigger picture, obviously, we've already kind of went over where we may bounce. We may only get to 425, but from the trend sequence perspective, now if we do actually stay out of this consolidation range break here, we'd be looking for the markets to put in a lower low. That would be the next move. Okay. that is everything I wanted to go over from this viewpoint. I think let's just zoom in here really quickly on a smaller time frame chart. And just look at this from maybe a 4 hour perspective, so you can kind of see the range that we were trading in and now how we are starting to break out of it. Okay, so I posted this to my Twitter. This was the last few days of price action that we have been trading in, and now you can see that we have taken it out and come down. We tried to sweep the lows, but Netflix earnings did help, and it looks like Tesla, a big fail in the earnings. It's down about $10 or so here in after hours, so not looking good here. But as far as a potential short trade, if we come back up, retest this balance zone, or retest the back test of this range, and then we look for a short, potentially down to this 4 hour value area low as a potential target. Of course, taking profits along the way. But so that's kind of an X-ray, a little more up close view of of what we were looking at on the daily time frame there. Okay, so let's go into some other charts really quickly. Why don't we look? I finally made this one up. I've been meaning to create it, and I kept on forgetting. And now I finally did it. Let's take a look at some downtrend channels here. We had them for the rally up. Now we've created some for the rally down. And we will also just keep these bigger picture trend lines on view as we continue in this trend that we are currently in. So you can see today kind of where we pushed up to and could not break over this trend line here in that 434 area. 430, yeah, basically 434, could not get over. And interesting enough, we are basically rejected where the value area highs from the yearly, right? So the markets, now obviously we stayed outside of value for a while here on the yearly, but we've been over this many times about markets wanting to having the need, I guess, so to speak, to be priced appropriately when it comes to where the volumes being the most volumes being traded. And when we get outside of value, you never know how long it's going to necessarily stay out of there, but eventually it will come back inside and trade back inside here. So value area highs tagged again here on the yearly, on this yearly chart, and pushed back down lower here. I guess the other thing that I forgot to mention, and that I wanted to mention on the other chart that we were looking at 2 seconds ago, was this kind of M pattern that we had been forming as well, which is a bearish pattern here. And you can see it. We've got some other interesting nicknames for it, but you can see it here. You could call it the booty cheeks, whatever you want to call it, an M, but there it is. Usually a bearish type of scenario when you see the M's. Remember, M's bearish, W's bullish, and now it is starting to play itself out. Boom, up, down, and now we have it down. So maybe we get a retrace here, and then we have that move down, like I already said. But just wanted to point out that kind of M pattern that kind of was setting up there, right? All right, so what can we take away from the fib perspective on the daily chart? And let's, oh, wrong one here. Oh, see, here's another thing. I need to extend these pivots for us. But let's look at the fibs really quickly. Oh, here we are. Okay. But it's going to put it here. Oh, boy. Now look at this. What happened here? Don't you love it when you get multiple points of confluence? Now, what happened today from this perspective? We'll be looking at these fibs, but also this trend channel that we have been watching. And we kind of discussed this in the weekend video as well. The fibs were also laying out a nice consolidation range for us, right? Between that 438 and 431 here. Now broken out of it, closing in the lower part of the range, breaking out of it. And you can see here today, we had recaptured this trend line. Recaptured, held it, broke it. At the open today, we tried to hold it, tried to get over, could not close over it, and boom, right? So tried to close over. It would have been a lot better for the Bears or for the Bulls to have closed back over. And now we have not, and which is obviously better for the Bears. Wait, I think I got that all mixed up. All right, you know what I meant. Anyway, so let's see here. I'll still be watching that 431, but let's keep an eye on the 431.50 as well. 432, definitely. We already kind of went over that on the daily chart from that perspective, but we'll watch this 50% here on the daily as well, and that's sitting around that 431.50. If we still trade under that, certainly under 432, obviously, but I'm still trading under that. We'll be looking a little bit more to the short side and seeing about coming down into the 618 area, and that lines up again with the 618. Where is it sitting? Right around our 425 from our earlier analysis, and that is the prior accumulation top that gave us a shift in market structure for that counter trend rally. There's a lot, right? Because this is that prior accumulation. There was a lot of either orders and volume in this zone. So where are markets, and we've talked about this before, what do markets at the end of the day, they only have one purpose, and what do they seek? They're always just seeking liquidity. And so for me also, and we already went over that from the trend perspective earlier. Now let's just talk about it from that liquidity perspective and the fib perspective, lining up with a move, especially if we stay under the 50% retracement, likely to see a move into the 618 at that point. Lines up perfectly with all that volume, all that liquidity in this area. And what else is going on there? A little bit of a volume node there, right? A little bit of a vacancy, as you can see here in the volume profile. Look at all the shares, say, necessarily traded here or even up here versus right here. And this kind of leads to a little bit more of that that structure that might need to be worked out. But these gaps I love because oftentimes we head for them. So let's see if that will be our next target, 425. But very cool though, at least for the Bears, that and considering I'm a short-term bear for right now, that we did break under this trend line. So everything's kind of working out so far in that short trade favor. So we'll see. Another thing I wanted to point out, and we're already starting to make the move, but if we started to still go up a little bit higher, I would have also started to point out we're not completely overbought yet, but we're getting pretty close. So even if we had sold up, I was willing and ready to add into my short swing on the puts, because at that point we would have been stretched outside of value again and seeing overbought readings here on the Momo. All right, plus the trend sequence. I mean, those are three reasons for me to be short at that point, but we never got it. All right, let's go into some other charts here. And let's see. Okay, we are going along. All right, we did our fibs. I don't think that there's anything from this perspective to go over. Nope. Okay, I think that's going to be it for the bigger picture stuff for SPY for now. let's go into a couple of the other instruments that we like to take a look at. Let's take at the market. Let's take a look at the market internals today, and expand these. Obviously, markets were weak today. I guess the only thing I will say here on the daily, before we actually get into that, we did close back below the daily 9, 20, and 50, all again. So keep an eye daily sitting at 432.60 right now, and the 20 sitting at 433, excuse me, and some change. 433.12. So keep an eye on those levels if we do come back test those. Again, may offer opportunities on back tests for the short side. Okay, so let's kind of go over and take a look at our sectors. Oil putting pressure also on the markets today. And that is obviously not good for the market when the energy is up. Everything really down today overall, except for XLP, which I believe is consumer staples, barely hanging on alive there. But either way, consumer staples definitely more of a risk off type of sector there. So not more of a defensive positioning. Outflows today. Look at Volt. Whoa, boy, really selling down some of the strongest outflows down, and sell volume overall that we've seen in a while, even surpassing last week's lows. So very strong outflows, and you can see the ADD never even had a chance today. The whole market just trending down, just hanging out here in this negative 1,500, 2,000 level. We'll see if we get any repair on that tomorrow, but internals really were just saying be very cautious long today, if at all. And I actually did take one trade long in the morning, and that was it. Everything else was short for me today. But yeah, so internals there, bearish, not looking good. Let's take a quick look, though, at our UVol. Let's see what the inflows look like. What do you mean? Oh, because I didn't put the dollar sign. I can't imagine them to be very strong, but we'll see if this thing loads. Oh, yeah. I mean, it was just... I mean, compared to the rest of the day, see how weak the buying volume was? Not very good. And you can obviously see the breadth today was just miserable. I mean, Dow... I mean, we've seen it worse. I've seen this negative 21, but... QQQ, negative 4 to 1, RTY 6 to 1, NYSE 5 to 1. Not the best. Not the best look. And always make sure that you guys keep an eye on those internals, like breadth. It can also give you a broader perspective of what's going on in the market, whether you really want to be trying to go long when the internals are saying that the overall strength in the market really isn't there. So let's take a look now at some of our VIX. Actually, let's go over a regular VIX chart first. So what can we take away from VIX? Well, I think over the weekend, I have to go back. But we were talking about the daily 920 holding on. We were talking about 15 in this half gap, 1572. Above that, market's still in trouble. And again, we tried to break out again over 20. I think we kissed it for a second, but couldn't really hang out. We'll see if we finally get that capitulation move and get that big spike, and get over with this downtrend, and then we can talk about potentially going long. But as it stands, nothing bearish here. What do we have though? We were looking at that M pattern, right, on the market. But what do we have here? Uh-oh. We've got our W, right? And again, you could also, make all sorts of funny jokes on what you wanna call it like this. But all joking aside, we've got that kind of double bottom, double rounded bottom here, putting it. And usually, once they break that neckline, which is pretty much that 20, you see a big move to the upside. How high do we get? I don't know. Maybe we come up into these highs, up into 23. I'm not sure. Maybe we only get 21. Either way, nothing bearish looking bearish looking on VIX at the moment. So what can we look at? What can we take away from VIX futures and our other VIX instruments? Very interesting here. VIX futures. This is kind of surprising me. I'll be frank. Super low. I'm not exactly sure if what's going on here, but this really dropped down today, and we've got the 9-day versus the monthly still below the zero line. I would say that is kind of interesting, and I would say it could be a canary in the coal mine, but then we have another conflicting signal here on the VVIX back above that 103, 105 level. Now, the reason VVIX may be up a little bit is because we did have, big options events with earnings with Netflix and Tesla, so that could be elevating the VVIX a little bit. But as we know, we've already talked about the 103, 105. If we are staying over that, watch for further volatility in the markets overall. Ideally, the bears are going to want to see moves back over zero here and for this to perk back up, but I think the VIX futures kind of went down a bit because a lot of volatility in the short term has just been sucked out of the market since those earnings events just passed us. So we'll see, but definitely a little interesting here, seeing VVIX up and then these kind of the 9-day and monthly and the VIX futures kind of down, but I wouldn't be surprised to see this tick up a little bit tomorrow, to be honest. But let's see if we do tomorrow, if we are still above 105. It's not a convincing close for me. I don't know. I went over on the weekend, I believe, as well. Even this one wasn't a convincing close, and what happened? We broke back below. So let's see if we actually get a couple of closes above that 103, 105, and then we could really start talking about some maybe potential bigger downside moves coming into the market. I need this a little bit more in line with back over zero, though, to feel really confident about that. May see a little bit of a counter trend rally tomorrow. That will be interesting. So we'll see. All we can do is set our levels and have a plan for each side, and then act accordingly as we do. All right, let's take a look at some of our other indicators that we like to look at here for our views on the market. Looking at the percentage of stocks in the S&P trading above their 50-day simple moving average, it's hovering right around that 30 area, and we haven't looked at this one in a while, but we were talking about that extreme level we were getting here, causing usually big moves in the market for potential counter trend rallies, and we did in fact get that. Now, if we go back in the videos, we were talking about where may we stop, right around this 30% mark. So interesting here to see us try to get over that 30%. We were yesterday, or at least at one point today, we were at 33%, and then we ended up closing just under that area, not by too much, 27%. Sure, I think we could also try to maybe make a little case for a little inverted head and shoulders here. I mean, it's not the cleanest, but The main thing I'm going to be watching is if in fact we can hold over 30. What takes place here if this is true? We were talking about, from, doing a little trend analysis even on this, we were talking about that move up to 30 would still be potentially putting in what? We had our lower low, now our low. What's the next move? Maybe it's not a lower low, but but maybe we do come down a bit more and come down to say to 19%, or maybe 18 or 17, somewhere in that area. So, but just think of it from that way, though, right? Lower low, lower high, boom, 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 and we should see that come down. What's going on with the 200? The amount of stocks trading under the 200 simple day moving average, a little bit of a push off of our 36% marker here, but really struggling. Kind of, we're doing a double toppy here, right? Tried to get up, equal high, and then back down. So we'll see. Let's keep an eye on this 36 level, 36% here, very close to that. See if we trade into it right here, and then maybe we do get some type of a little relief rally bounce there. But same thing from the trend perspective. I mean, there's our higher low, lower high, right, lower low, lower high, lower low, right, and we would think that we would get a move like this. So we'll see. Yeah. All right. What else do we have? We did the VIX. We went over internals. We looked at some in-depth market breadth. Why don't we take a look at our two last items before we get into our plan for the back half of the week? Lord have mercy, right? TNX just has not stopped and doesn't seem like it's going to anytime soon. But here we are. We broke over the 48. Came into our 49. Look right where we stopped. We already went over this level here. Right where we stopped. Boom. Okay. Now, as long as we hold over 48, potential flag situation, we'll use that a little bit of a marker for a potential for the potential formation of a flag or Rooney here, right? If we get under 48, that'll be a boat a little bit better. But as I went over, even when we started to dip, even if we dip down back to 47, or even if we dip down to 48, and earlier we were talking about that potential counter trend rally. I don't know if it'll be a quote unquote rally, but maybe a little bit of a bounce, maybe a 50% retracement of today's intraday range tomorrow. We'll see. But and we were looking at that and kind of saying maybe we would get that from what we were looking at on our VIX instruments. That theory also may line up with where we are on TNX here. Right at this really critical level, if we see a push back down into that 48 zone, that could give us a little bit relief on equities. But what would really be happening, of course, as we went over in the trend sequence, when we even dip down here, what is that really? It's just a lower high, and could just be setting us up for a lower part of the range at the flag, and then breaks out. So if we break under 48, okay, then we might get a little bit more of a bounce and relief for the bulls, but we could still trade down into here, into 47, and still maybe, well, who knows, maybe we come and reject there. I don't know, but considering the strength of the trend, even if we came up here, you would think that they probably would be able to break out over that 48 again and come back into 49. Will that reject? I don't know. Maybe there it does reject and then resumes like that. So there are a couple of paths that TNX may take either one of them. Short-term bounce. This again will give us a short-term bounce potentially in equities here as well, but we just have to keep in mind of the overall trend and pushing up. What we also may see in rates is just the consolidation. Maybe we just consolidate even in it like this for a while, and we don't do anything. So we have to be prepared for that as well, and see. But we can just trade in that range. If we start to break under, okay, then we can start talking about a little bit better, more of a stronger bounce. Of course, this is kind of, without a doubt, a parabolic move, so to speak. But because I think actually the 10-year hit a level that it hasn't seen since 2007 today at one point. But let's see, that one step at a time. Let's see if they can get us under 47. I mean, even if we consolidate up here, it's still pretty much bearish, like I said. So, yeah. Let's take a look at the dollar. And what's going on here in the dollar? Okay. Just hanging out. Same kind of situation as TNX, as it's just had this incredible rally. Can't wait then for them to fix these damn candles. Just hanging out here. Maybe we could make a case for a potential inverted head and shoulders, right? Neckline again being around the 107, 106, 80, 90 area. Break over that potentially can lead us back to the 107 30s. Over the 107 30s, we're going to be looking for the 107 75 70 zone. So we'll watch out for that potential move. But we could just hang out here. Another situation. We'll start to talk about maybe some more downside moves. Really, if we start to sweep these mid-month lows on the 12th, then we could potentially just hang out here, and maybe that'd be a little bit more of a bearish sign for the dollar. But it could, has no problem trading into 104. And still overall being strong, right? Anything like this is still just, bullish consolidation more or less. But we shall see. Dollar, it came down and hit that daily 20 perfectly and came back up. So we'll watch that inverted head and shoulders, but holding still over the 106, 105, 85, we'll call it. Still all strong for the dollar. So that would lead good for the bears. All right, let's get into some SPY now and take a look at some fibs from the day trading perspective. Then we'll of course close it out with our balance zones and enjoy the rest of our evenings. And I apologize, I hope I don't sneeze, but I may. I'm just warning everybody now. Okay, I'm sorry about that. I tried to hit the gain there. I apologize. All right, let's look at some. Where are they? Here we go. Some day trading fibs. Pull these bad boys up. The hell is this thing doing? Nope, gonna need more time there. Sorry. Let's just look at it from the 4-hour view. Okay. All right. So what could we take away from the 4-hour view right here? Let me take away this line here. So we've broken below the 50% retracement from this perspective. And what we want to watch for tomorrow, again, very similar as what we went over with the range. A move back up to retest this prior area. Look for a potential short, back down to the lows, right? And where we are right now, as it stands, coming back up into this level would be about that 50% retracement of today's downside move. You can see here, though, from the fib perspective, how 435, right? And we've talked about that level. We know that level from our balance zones. And it's great to see confluence. 435 really has been our pivot for the bulls. Above that, we'll look for that long under. No, today we opened below, came back up, retested that 435. Actually, about almost twice today. And a nice short there. Boom, right off 435 for the downside. So kind of in a rock and a hard place. Going with the trend. If we open up right here, may I try the long around that 429.50 area, 45? Sure, maybe. Looking for moves back up into the retracement here, up into the 50%, then maybe going short. If we don't open down here, if we open somewhere in the middle like this, it's a little bit more dicey from this perspective. At that point, probably better not to diddle in the middle. Just wait for it to either come down to this next major support area or for the retest for the short here. Probably better just to sit on your hands if we're trading somewhere in this area. But we'll look at our balance zones to see if there are any other levels that we could take a look at. But from this view, from the fib view, nothing to do here. Just wait to either come back into the 38.2 for a potential long, back up to retrace, taking profits along the way, but ultimately looking for that back test of the prior structure break up into the 50% retracement, 432, 432.30, anywhere in that area, and then hit it this short. It's going to be hard press to get a real nice long unless we really get back over that 432 area. And even then, we still have, at least from the 4-hour, we've got this POC at 433 60 zone, so we may have a little bit of trouble there as well. But if we really start to sweep today's Wednesday's lows, start getting some closes under that 439.45, we will call it, looking for trades down. Next big level, nice confluence here. Value area lows sitting at 425.50, and we've got our 23.6 sitting at 420 at 426, 425.95 thereabouts. So nice confluence there for a potential secondary target on the short side if in fact we do start to really accept under that 429.45 area. Again, even if we come down and we're trading at 438, I'm not gonna chase that haul, right? We don't buy the breakouts, we don't chase the breakouts, we don't chase moves. What will we do at that point? We sit on our hands, wait for a retest, and then we try to hit that short down like that. If we don't get the retest, if it doesn't come close, then we don't do anything, and it's fine. There's gonna be a million trades that you miss, no big deal. We'll just wait and move on. It's it's better to take no trade than a sloppy trade, right? All right. Let's get into some balance zones now and then call it an evening. Well, shoot. Actually, there was one other daily chart that I wanted to go over that I forgot, so I'm glad I remembered. Let's just do that really quickly, because we wanted to see where we are from our bigger picture trend channel that we have been watching. Wow, my toss is really struggling. Okay, perfect. Actually, I'm glad that we pulled this up because of where we are. And this might lead into a little bit of that theory from our VIX instruments that we could see a little bit of a retracement tomorrow. Now, we were trading above our 50%, our midway point in this downtrend channel. Now we close back below, but we're kind of in a rock and a hard place. And the other thing I want to mention, and this is going to be good for people that actually stayed and hung out the whole time, not only A, because it will help you, but B, because this is very important. Tomorrow, watch out also for chop, because we had a volatility expansion today. Markets were down, trending down. What's the most likely thing to happen? Are we going to see another down day, 1%? Probably not. If I had to bet, I would be betting that we're going to see a plus or negative day, 25, negative 25, positive 25, 30, negative or positive, somewhere in that range. Because it wouldn't surprise me to see this bouncing and hanging out under here. So from our big picture trend perspective, though, of this channel, look where we stopped today. Boom, right on our trend line. Beautiful. What could we see? Potentially a move for the back test of our midpoint here. Come up right to this area, and then we come back down. Now, the $64,000 question is, will we actually break the trend again at this point? We don't know. Maybe from there, we just end up bouncing and coming back into our consolidation range here. Very possible. Or they actually have the gusto to push us back under. We are still under the daily 920 and 50. So, as far as from the EMA perspective, bears are back in control from that view. So if I had to pick a side, obviously, all things considered, it's going to be that we break, but I never know. It's big. It's a big area. So pay attention. But look how beautifully that bounced there. Great move off of this key trend. We've already kind of looked at this chart plenty, but I'll just zoom out. Everyone should have one of their charts just so they can have this bigger view. And there it is, so you can copy it if you want to. All right. Let's get into some balance zones. Okay. All right. Well. And actually I did, because I think, I did want to point out, I think we are below last Friday's highs, which was important. I think that was at 431 area. I wanted to zoom out here a little bit. So being back below these highs, not ideal. Not ideal for the bulls, but doesn't mean we can't come back and have a little bit of a retest action in the opposite direction. I don't really like the risk to reward for the short, but it is possible. Another way to view it is to short back up against Friday's highs. Nice confluence. Of course, this is going to change where the moving averages are, but nice confluence right now. Look how nicely actually this is lining up at our two levels. Hourly 9, back test into potential short trade idea. Back test into the hourly 9 here, and then boom. Oh God, I thought I was doing my arrow. Into the hourly 9, and then boom, back down. Look where we bounced today, right in our next balance zone, 429.50 to 428.90 area. Last balance zone, that's where we saw the bounce. You can see the reaction to Netflix there, where we jumped up for a second. I like a little bit better risk to reward. It's going to be back at this 432. We've already talked about that 432.30, 432 area, right? Look at the confluence now. Of course, this is going to move, but how beautiful is this right here on our two key levels, that 420, that 432.40, and this 431 area, 9 and 20 on the hourly, lined up right there. So I like that. I like the 432 short better, personally. And what would that give us? That's going to give us a 50% retrace of today's move and a retrace and a back test of that balance zone that we already went over earlier in the video from the daily chart. So those are two ideas. Even if you're like, you could also work an offer, take a starter here, and then look to add into it here. Another way you could do it, or just wait. I like the risk to reward better here, personally. So I'd be looking more for that trade, because the 20 will move, but you've got, if it's in that area, you've got the balance range, a retest, and a moving average, and our trend all in our favor. Okay, so 3 reasons for taking that trade, and I've talked about that. I really like 3 reasons or more to really take a trade. If I don't have it, I will either stay out, or if I've got 2 reasons, I might take it, but a lot smaller size. So although I may end up being a long at the top of this balance zone tomorrow, I will have very tempered expectations to potentially only trade back up into 431, or very maybe 432. Either one, potential shorts. I like the 431 short better if we opened up down into this area here, because then I've got $2 or $3 of range to trade, right? So from here, that trade to here, okay, now I have a short that I can actually work with. If we're sitting here, the risk towards 1-to-1 basically. I'm not interested in that. I want 2-to-1 minimum. Okay, 3-to-1 better. You shouldn't even think about a trade that's 1-to-1 risk to reward. And what, the one at 432, and again, well, we don't know if 431 is going to break at that point, but this one, that's 3-to-1. So those are trades I'm interested in. Hard to get long unless we really recapture 432, but like I said, I might try some. You might have an opportunity there at the bottom of this balance, depending on where we open up, right? But you can see here the 435, how nicely, right? Those touches in the morning came right up, touch, bottom of our balance, short, came back down. Here, another opportunity under our 433.60 area, short here, and you can just really see how nicely these levels that we have here in between our 2 bigger balance zones worked out for us. So we will keep those and keep them on watch. But I will say that back over 432, probably going to lead us back to 431 or 433 50 60 zone, another potential short zone. A little bit I don't want to say riskier, but what's the word, the thing that I don't like about it quite as much is that we are back inside of the consolidation range at that point. However, from an hourly sequence, I mean, it's still just a downtrend and a higher low, a lower high, excuse me. So, but if we do start getting back over that 433, we're looking for trades back up into the 435 area. Potential double top or triple top there, so another short idea. But I mean, these are pretty much the ranges that we're going to be working with. I don't see us trading outside of this range. Tomorrow. I expect a smaller range tomorrow, because since we had an expansion from volatility. So watch out for that. Again, remember those chop price action can give us a lot of false breakouts, and that's why we don't chase the false breakouts, right? You get trapped trying to buy that long. You get trapped trying to do that short and try to play that short. No, we don't do that. But if we are actually able to get back under that 428.90, we'll call it, look out below, looking for 427.60, 427.50. Under that, 426.30, 426.35, excuse me, 426.35, 25 area, and then under that, 425.75 will be our next downside zones that we will be watching. We've already been over our upside balance areas because we were trading in that for a while, so we all know over 435, back to 437, over 437, back to 438, 438.50, and 439. So those are the levels. I hope they help. I want to appreciate or give appreciation to all my listeners and my followers on here. If you have enjoyed the video and you aren't following me, make sure you give me a follow. If you find the content valuable, means a ton to me. Even the thumbs up, I really love it. It helps out the channel as well, helps work that algorithm. Feel free to share the video on Twitter if you are enjoying them. And again, big thank you to all my followers, supporters, listeners. Love you guys so much. And how do we close out each video? Remember, a prepared trader is a profitable trader. That's why we do these. We have our levels and our plans set beforehand, so we're not trying to predict. We just react to the price. We have our general idea of what may happen, but again, we react to our prices. So plan that trade and trade your plan. Let's have a great back half of the week, and I will see you over the weekend. All right, take care.